Hi, this is Randy Finney with the right side of the chart, and today is Wednesday, November 2nd, 2016. I wanted to do an overview and update on gold. I've had a couple requests. I haven't posted much on the precious metals or the miners lately, and that's because my opinion hasn't been that strong. But there are some developments worth noting today. I'll start out here with the currencies real quick. As most of you know, that over time there's a pretty good correlation between the U.S. dollar and gold. It's actually an inverse correlation. Dollar down, gold goes up. Dollar up, gold goes down, and that's simply a function of, you can buy more gold when the dollar is strong. And when the dollar is weak, gold then costs more in U.S. dollars. So that relationship has been one that's been on and off. At times there have been some disconnects, but again, on balance, I've illustrated the correlation many times in the past, and I think most are aware. You see that correlation with oil as well, oil and the dollar. So let's start out here looking at the dollar. This is, and what I'd like to do is actually look at the two major currency pairs, or the two major currencies that make up the bulk of the dollar index, and that is the euro, which is by far the largest weighting, and then we'll look at the Japanese yen. That those two alone make up well over half of the returns or the weighting in the U.S. dollar index. The rest being all the other major global currencies. So if we know where the euro and the yen are going, that gives us a good idea where the dollar is going. So this is what's happened in recent months. I've put this chart up. You can pull these, use the ticker drop down box on the front page, select ticker, and you can pull up UR-USD. And this chart was highlighted here. We were in this triangle pattern. At the time, I had expected a downside resolution, and that's exactly what happened. I pointed out it's before and right after, and the breakdown and after the back test. So that has certainly played out. It played out about as much as expected as far as a measured move. If you really look at the widest part of this pattern here, that's a rough estimate, just like wedges, and you can see that a good part of it has played out already. Not all the way down. This was my target, still is. I think we get there over time, but that's what's happened so far. Is a very impulsive move down in the euro against the dollar, and has since bounced right back up to resistance. Now you can see this resistance line, a little pop-up box there. I haven't modified that line since October 4th, so it's been about a month. So that was a support line before, and that's why it added it there, which was since taken out. Again, you can go back to the left and see numerous reactions. So I think that's a pretty key level in the euro-US dollar pair. That's about at 111.3, somewhere around there, and that's about what we're up against right now. So point being is the euro is at resistance. The euro US dollar pair is at resistance. Still, trend indicators remain bearish, and at the very least, I would expect a pullback, a reaction there. Let's take a quick look at the yen. JPY, the US dollar versus the yen. This is another pattern I was posting before it even broke out. Just a beautiful, beautiful bearish falling wedge, but well defined. The trend lines, these have not been modified since. So again, this was posted in advance. Even at the time, I expected one more thrust back down, more likely before breakout, and that's what happened. We had a thrust down, and then we did break out. Now this wedge pattern, this large wedge pattern, hasn't even come close to playing out to where it might be expected. If we take the measured move, I'm discounting that little candlestick wick down there, that shadow. But here's the widest part of the wedge, at least the way I'm using it, and that projects all the way up here. And this is my actual, ultimate target around 111.11 on the USD JPY, so the dollar yen pair. And all that's happened so far, we've had a clean break out of the wedge. Prices have moved up. We're well beyond the point where that would have proved to have been a false breakout. And this just looks like the first decent pullback after a pretty nice rally in the pair. And as you can see here, here's a support level I added today. Quite a few reactions when you go back to the left. Some reactions here, reactions there, and reactions there. So point being that the other chart was the euro versus the US dollar. This is the US dollar versus the yen, meaning so far the dollar has been rising against the yen, but has since pulled back. fell against the yen, but is at support or coming up on support, very close to it, not yet there, but it could bounce sooner. There's a little bit. I could actually add another line right there, but so I see maybe a hair more downside in the in this pair. Then a reversal, which would mean dollar up against the yen, a stronger dollar, and to go back to the euro. US dollar. Remember, this is in reverse, so when this is rising, the euro is gaining against the dollar, or the dollar is falling. So if this pair pulls back, that means then that the dollar is rising against the euro. So both of these charts again indicate that although the dollar has been selling off recently, I think that move is about over, at least for a pullback, and that this aligns with my analysis on gold. Now let's get to the metals. I'm not a big currency trader. For those of you that are, you can use those charts, trade them, ask me questions. I'm glad to render my opinion. There, at times I'll trade them. It's just not my cup of tea. I prefer to follow the currencies, of course, to get to either confirm or refute my analysis on gold, oil, other dollar-sensitive assets that I'm trading. And in this case, here's a chart of gold. Quite a few. Forget about all these trend lines to the left. The big thing to focus on here. Let's look at these levels. As you guys know, I was bearish on gold really for quite a while, and we milked. Although I didn't use gold as an official trade idea, I shorted the miners. That's my proxy. When I trade gold, I prefer to trade the miners. It's just a leverage play on gold. If you get the call on gold right, the miners are going to go up 2, 3, or more times what gold will in percentage terms, or vice versa on the downside. And so that played out. These were my targets. I had a first support target level here, second support target level there, was hit, slight overshoot, in a sense reversed. And again, as I've told a lot of you, my conviction wasn't so strong, and I still do suspect I'm very much open to the possibility of another thrust down in the metals. Can't say at this point, even though I put a short on a nugget today. Can't say how long I'll hold it, but I'm open to the possibilities of this was a target way back then. When I say target hit, that 115.17 target, that was on this rising wedge here, and that was that target that was hit back there in gold. But I'd mentioned that after this top, this same level is also a potential downside target that I can see here. A couple things. First of all, the fact that we are at resistance, as you can see right now. This former support level was really a support zone, but you can see quite a few reactions here and here. You have a couple reactions. You have 2 reactions there on the top of that support zone. There's another reaction on the top of the support zone, reactions there. And so here we are, a pretty, at least a near-term overbought bounce. We're not overbought on the daily time frame, but when you look at the short term, the intraday charts, we are overbought because this has been quite a pretty good run in gold. So overbought at resistance doesn't mean you can't punch through that resistance level. It simply means from trading, this is an objective level to short for either a pullback trade, meaning a trade that could pull back intraday, maybe 1, 2, 3 days, short-term trade, or put on a swing trade. And that's why I like to often short the opposite 3-time ETF. In this case, I shorted Nugget. I could have bought Dust, but I talked to you guys a lot about the decay. If you sit there and you hold Dust for 3, 4 months, or even 3 or 4 weeks, as a short play on gold, if you go long Dust, there's going to be some decay. So by shorting the long version, in this case Nugget, if I happen to decide to tuck that one away for more than just a pullback trade, if something convinces me in the charts that we're going to go back down here, it would probably take weeks, if not months, to get there. Therefore, I would rather hold on, tuck a short on Nugget away than tuck a long trade on Dust away. Probably just confuse the heck out of you guys, but send me questions if you have any questions on that. I've talked about my preference to short the 3-time ETFs versus go long many times in the past. So there it is. Simple as that. Gold at resistance. The currencies, major currency pairs at resistance or support, depending on which side you look at it. And I often talk about the the trend indicators. Not perfect, but typically when you have the 9 EMA, which is a signal line on the MACD, below the zero line, this dotted line, the trend as it was back here is bearish, and when that is above, as it was throughout this entire bull run, you can see here above, barring this very brief whipsaw signal right here that said get long and stay long. And since this point right here, for months now, all the way up here, the trend is at least this by this one trend indicator. And again, trend indicators, there's not any one trend indicator out there that's perfect, that's going to get you in right away, get you out right away, but this does help confirm the larger trend. Therefore, a bounce to support while oversold on the near term with the primary trend still clearly bearish. Here's that white line, the signal line. It's not even close to crossing over the zero line. I use that white line because that's the second of the two to cross. I don't use the MACD line, only the 90 MA. So there's that. Let's take a look. So let me see if there's anything on the 60-minute chart before we move on to GDX, and I'll wrap it up. Yeah, there you can see a little bit better. I mentioned it's more of a resistance zone that we're at, and we're at the bottom of it in the 60-minute chart. Let's go to a 2-hour chart. Okay, you can see it here as well. So again, I went back on the daily chart. There's a reaction there, some reactions, and here we're at the bottom of it. So gold could very well push up to the top of that level. As I mentioned, it can do whatever it wants. It can keep going. If it goes any further than that, there's a pretty significant downtrend line you can see here, coming off the highs back in early August with quite a few reactions. It's pretty much what we have here is a couple layers of resistance that it has to get through. And being that gold is so extended, if it manages to punch through this horizontal support level here, or resistance level, I should say, then just not far ahead, let's clear out these annotations and I'll tell you how far. I'm going to grab the measuring tool. I'll have to move that line to do so. Let's say it goes up there. You're only talking about another 1.25%, roughly. Depends how long it takes to get there. So, I'm willing to give it a little room. Now, of course, if you're trading the miners, let's get to the miners. You would look at more than a 1.25%, because if gold goes up another 1.25%, all other things being equal, the miners will probably go up 3-4% or more. This is GDX. I flipped over. We're on a 60-minute time frame just a second ago there on gold, so I'll just stick with the 60-minute time frame, or this is actually a 2-hour. You can see a comparable downtrend line in GDX. Now, GDX has just taken that out. But remember, guys, I always say this. The miners ultimately follow the metals. There are times where they get ahead of themselves or they lag behind. We saw that. I talked about that in the beginning of the year when the miners broke down to new lows, yet gold had not. Gold and silver were both holding up well below their lows back in early January. Gold bottomed in December and started moving higher. The miners didn't bottom till January of 2016. And I pointed that out as a potentially bullish sign that gold was holding up. Because ultimately, take any chart, go back long term, 10, 20 years, I don't care. You'll have to use the Huey index because GDX hasn't been around that long. You will see that the miners, there's a very, very clear correlation. So therefore, the fact that the miners have broken out here, but yet gold is approaching resistance, this is what I think a lot of, one problem with especially rookie traders or some people that are let's say nearsighted or have tunnel vision. They're only trading the charts of GDX. They're not looking at gold. They're not looking at silver. They're not looking at the currencies. They might say, oh, wow, here's a breakout today in GDX. It's clearly taken out that trend line. That's bullish. And on face value, it is. But a couple things to note. You have this divergence here. See the red lines? Let me flip over to a 60-minute chart. I think it shows a little better. There's a 60-minute chart. You can see potential. And yet it's not yet confirmed, but that MACD, you can see it starting to curl down and roll over with the MACD making equal high from this previous peak. The RSI is making a lower high versus prices making a higher high. So this breakout of that trend line I just talked about could very well prove to be a false breakout. And another thing that I often say, is fewer things in trading are more bullish or bearish than a failed breakout. So here's if you will, this is sort of a wedge pattern. I had the divergence, that red line up there. You have this uptrend line to look at on GDX. If it breaks below that level, it will also have failed the breakout of that this triangle shown here. Again, this is a 60-minute time frame. Same one I just showed you out on the 2-hour time frame. You can also see those divergences there. So that's what I'm looking at. And upside, I'm paying a little bit more attention to gold. I don't see a lot of solid levels. I do have a resistance level here on GDX. And, I'll give it a little room. I always adjust my position size. I know Nugget's 3 times leveraged, therefore I always take at least, a third of what I would do if I were just do a pure short or long on GDX. I adjust that down. And I also adjust it down for the volatility, because as you guys know, anybody listening to this video has probably traded the miners, and it is far from unusual to see GDX alone be up or down 5% in a day. And that's a diversified ETF. Now you take the 3-time leverage on dust or nugget, and you're talking 15% plus up or down days. And if you don't adjust your position size down for that, it's just going to drive you crazy mentally. If the stock goes against you or the ETF moves against you one day, and you have an oversized position, it's probably going to give you undue stress and not let you think clearly. And or run your stops depending on how much room you're giving it. So that's GDX. Let's see, daily chart is the only thing I didn't cover. Okay, here's GDX on the daily chart. Trend indicators, just like on gold, you can see here when the 9 EMA was below the 0 level, as it was, barring this one trying to talk fast to get this video out. Barring this one brief whipsaw signal, the trend was bearish. Choppy sideways, but down. This is that bottoming I talked about in GDX. If you go back, reference the site, I was, even before I talked about a bullish scenario, very, talking about a potential explosive rally before this happened if GDX had dropped below that 13 level, because that would create a bear trap move, suck in a lot more shorts, shake out the last of the longs. And at the time I'd point out gold and silver were both holding up, and they had bottomed a month earlier in December, and that is exactly what happened. So we had that explosive rally off the bottom, and again, I'm just referring back to what could happen here with this recent breakout. Here's another view. When you look at the daily chart on GDX, you have this, what could be, it's a little bit early, there's not that many reactions, but I have 2 downtrend lines that are roughly parallel, so that's a descending price channel, and it looks like GDX broke above that recently. So again, face value, bullish as long as that holds. Maybe at the least for a pullback trade here, would be just come in, back test that channel at a lower level, and then go on to move higher and maybe ultimately break above that level. So even that would be a decent trade. Pullback trade to back test that would come down, probably back test somewhere around here. That's a 6+% drop in GDX. It shows on the box on the upper left-hand corner. So, multiply that times 3 if you want to play that game. But again, if you've taken dust or nugget and you've adjusted your position size down by a third, then that's really your net gain anyways. What else do I want to point out? 2567-ish is a pretty decent resistance level. You can see all the reactions here to the left. That was a pretty solid support level here at this point in time. When it broke with conviction. There was a large gap, followed by a very impulsive candle that further affirms that that was a significant technical level. The fact that it broke down and didn't just limp through and get back above there, that when it broke down with conviction, with a gap, and then a very strong, powerful red candle. There's also quite a few reactions from above and below back here, as well as this gap right here. So you can see the reactions all the way back here. So this is a significant resistance level. Put on a scale 1 to 5, maybe call that a 4. So it's pretty good resistance level. So trend indicators, as I've mentioned, are bearish and have been bearish all the way going back to, looks like late August. Shorting, or at least I know quite a few on the site had gone long the miners lately, off that support level. Congratulations. So this video may also serve as a heads up. Now you might want to, if you think gold's going a lot higher and the miners are going higher, which is a possibility, then all you need to do at this point is maybe raise your stops to protect profits. Where you raise them to, it's hard to say. I mean, I could tell you there's support right there, about 24.95. I'm looking at the top of these candles in yesterday's lows. There's a bottom of a gap right here. If we really zoom in, you can see this candlestick here. That would be another objective level, especially on a daily close below 24.54. So those are the levels that you can trail stops. And so far, by the look of this doji, you see this doji candlestick here. That means intraday, and this is why I often talk about using daily closes and daily, breaks above and below trend lines when trading the daily time frame, because intraday moves above support or below above resistance or below support are far from uncommon. In fact, it's more the norm with GDX or any highly volatile, security or ETF that moves a lot in one day. This thing has a lot of momentum, so it tends to overshoot these levels, and that's why you need to usually give it a little extra room on your stop. So that's it, guys. That's the case for a pullback short, or maybe booking some profits if you've milked this run and you're just not sure how much more is left in it. I may or may not make this an official trade idea. Right now, I just wanted to get the video out there for you guys to see what I'm looking at. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.